Good morning, ladies and gentlemen. Hope you're having a wonderful Wednesday start. And today we're going to be talking about what do head and shoulders lead to? And the famous phrase is head and shoulders, knees and toes, where the IWM or Russell is indicating as a head and shoulders on its daily right here, forming left shoulder, right head, and right shoulder. And right now, complete rejection off your 50-day moving average right here. You pierced above it, failed to hold, broke down below it, got rejected almost to the tick today. If we go to the 5-minute view, you actually did. You opened up the candle right below the 50-day moving average, rejected off it, and sold off the whole entire day. So again, the Russell is, mine use it as a larger indication of the broader stock market because 2,000 companies average to give you an index versus the select few in the tech and the S&P that drag up like your Apples, your Amazons, Microsofts. It gives me a better sense of a general economy versus just 5 or 6 select companies or the magnificent 5 or 7, whatever toying term they're trying to come up with today. But if this is a hypothetical A to B pattern playing out on the Russell, or if you trade the Russell, basically indication of where the other indexes could be going, we're looking at 174.72. So basically from current price, you're looking at a 6% sell-off, or from localized high of the start, you're looking more of a 12% correction. So that may be your correction leg that we've been trying to get for quite some time. And honestly, the way you standardly draw out this pattern is from the base, projecting the Russell down to about the 1.618% projection off the A to B pattern, which will bring it to new lows going close back to the October lows. As more things point towards more downside, and we got a couple things we got to cover today, it really is starting to highlight the euphoric nature of the market, and maybe that people are getting a little ahead of themselves. Please remember that September is the worst performing month in the index's history by far. It always ends red, has lackluster performance, more of a sell month than any other month in history, and data supports that going back almost since the existence of the stock market. So also most crashes like the famous Black Tuesday or 1929, 1978 all happened in around September. So again, the September has a very ominous meaning in the stock market. Now, that doesn't necessarily mean that we're going to get a sell-off in September. It doesn't necessarily mean we're going to get a crash. But there's a couple things I want to point out today that kind of need to keep in the back of your mind for the longer term play, not short term. Short term, I still believe that we could get a bullish run on the market. Is still capable there, but I'm talking about long term, 3, 6, 9, a year from now, where we may be going, looking at the bigger picture. So right now, Russell, if you basically break, let's say the 180, which would be your moving averages, it's a pretty simple task. Is this pattern's busted if you don't break those moving averages. Come down, you find support, you fail to break them, you bounce off it, trade above the right shoulder peak of 191.88, or any time between now and then, you invalidate this pattern and probably get a nice bullish run. You would actually probably form a W if you did that, and therefore be more bullish than bearish. But until these patterns complete, they're basically theoretical of where we could be going. And again, this is just giving you the options. It doesn't necessarily mean they have to play out. You have to follow them yourself and then make the decision, therefore, how you're going to trade them. So jumping over the S&P. The S&P today, closing red, closing below, and basically forming similarly a head and shoulders on its daily as well. Not as evident as the IWM, but still kind of patterning out. Base would be around that 134, 130 area, roughly, depending on which line you take. But right now, I'm looking for one thing. I'm looking, are we going to break the 50-day moving average? That's when I'm going to go bearish on the market. Not before then. We have decreasing volume, increasing price. So it's giving an indication that a possible reversal is there soon. And if we look at S&P futures, I like looking at futures just because it gives me a better sense of what smart money is doing versus the S&P. As we can see here, the MACD is starting to weaken a little bit, and the smart money flow is showing selling pressure from smart money, but you still got bullish price action in the market. Similarly, if we jump over to S&P, similar story. MACD trying to curl, RSI is trying to cross back over that 50 line. We could begin more selling, and we do have support right here. that was previously tapped at that 432 area. So we'd really have to see if that head and shoulders completes, and then we'd retest the trend line around the 420s or 410 area on the S&P. Then similarly, NASDAQ, we got a sell signal up here like we had previously here. MACD is looking a little weak, definitely have divergence on the MACD here. And we're starting to get early sign warnings that, hey, reversal possibly incoming. The target right here for the NASDAQ be 353, which would put us, if we go back to my weekend chart, 353 would put us right below the breakdown area, below this trend line. So we'd definitely be accelerating that sell off there. And if you can see it, maybe possibly a head and shoulders forming right here on the NASDAQ as well. So all the indexes are forming a head and shoulders. Now, why are we not having more bullish price action? And we did cover this on the weekend deep dive, link down in the description below. If you guys didn't see that, I highly recommend it. Depending on what section, it's all timestamp. You can check it out for yourself. I didn't see this until this morning, and I did say during the weekend that oil was going to do something crazy and probably keep going. I did not expect Saudi Arabia to extend oil cuts into the end of the year. So OPEC has extended all their oil cuts to the end of the year, basically giving a significant boost to oil price by shorting the supply. They're constricting supply with the same amount of demand. Price naturally goes higher. Today, oil basically on the open exploded up. It did come down back to that $87 a barrel mark, but $87 a barrel, guys. Nearly 2 months ago, we were sitting at the 60s, where we thought oil was going to be bearish, that we're going to have this massive downturn in oil, which would just traditionally associate with recessions, or you're going to have this inflationary boondoggle now. Because what's the one thing keeping oil basically suppressed? What's keeping one thing CPI is suppressed is energy, and mainly oil, gasoline in particular, down negative 17% on the last report, or 12% I should say. And I said in the weekend deep dive that I believe that we're going to wipe out all those negatives on this next report, which we will find out next week, right before the Fed actually makes their interest rate decision. And throw it down in the comment section below, guys, if you think it's going to be a 1 for hike or 2 for pause. So let me know your thoughts, and if you think hike, how much? Throw in the comment section. I really want to hear your thoughts. But overall, if we look at oil right here, this A to B pattern is completely intact, and we're basically heading much, much higher. I have a price target of $95.39 for oil. And if we look at where oil has been traditionally pulling back on these levels, they pull back to the 30% retracement right here. So then push up, 30% retracement, push up. Now here, let's say this pushes up to 30% retracement, and this was the top in this latest leg. I think you may actually get all the way up to basically 90, 91 before he gets that 30% retracement. So I could easily see 92 back off, retrace to 86, and then rotate much higher. That's where I could see oil going. However, we have to see how the oil prices are going to turn out and trade it accordingly. If you're in Chevron, Exxon, or any of those energy companies, you're definitely happy as a pig in mud because, well, you're just growing as oil keeps going up. We have a bullish cross on the SMAs for oil. So now we just have to see that 200 crossover that 50 weekly, and we get really truly bullish on oil. And this could be setting up to be one of the world's largest cup and handle patterns theoretically, where this would be one really ugly cup and handle, but who knows, weird things have happened. I really don't think that's going to play out necessarily as everyone thinks. But then again, as you can see here, I do believe this A to B pattern is going to come to fruition, causing oil to go up, causing inflation to go up, and therefore the market to absolutely take a dumpster fire on the way down. And if we look at some of the bigger tech stocks, just to see how their performance is doing, we can quickly jump over, let's see, to the king, Apple. Apple is nearly filling the gap, but it's really losing steam around this area. As you can see here, it opened below, it did close above. Now that's going into that event that they have coming up. So are we basically going to fill the gap, complete the gap fill, check that box, and then down we go? That would set up an A to B pattern on Apple, let's say from highs to lows, projecting to the gap fill, projecting all the way down towards those moving averages. As more bearish things set up, guys, it's more and more interesting to see how it all plays out. On Microsoft, barely, now you got above the 50-day moving average, so there's a check for the bulls there. So now can Microsoft hold it, or is this going to be like the IWM, get above, close below tomorrow, and just completely send it down the river? If we look at Amazon, stalling out around these areas of the moving averages. Really, right now, you should be seeing an explosion off its earnings and nearly fill the gap on Amazon. Still has a little bit to go for that gap fill, but you're barely holding that 200 weekly moving average, which really should be stronger support than it is. You shouldn't be bouncing around in it like that. If we go to Google, Google is showing strength. So if we look on the larger time frames, Google's coming into this area of large price supply. So that's an area where it's going to take a little bit of time to get through before it pushes past that 140 level. So I do see maybe a retest of the 50-day moving average in Google's future, just because it is pretty extended from it. It hasn't really retested in this consolidation right here, and definitely a 50-day retest maybe around the 130 region would be a healthy move for Google. That would give it some reprieve from this massive push up. And hypothetically, if you get a 30% retracement on this move, if you get a 23% retracement, that would be around the 50-day moving average. So again, that would be pretty bullish for Google. And last but not least, Nvidia just holding strong up in these highs and seemingly not able to stop pushing up. So we have to see when is this stock going to calm down? What is going to basically put an arrow through Nvidia, or is it even capable? Is it armor too strong for all the bears out there? So we have to see how all that plays out. And I hope you guys enjoyed this video. Hope you guys saw a couple things that you need to keep an eye out in the market. And I hope to see you in the next video tomorrow and possibly even after that. So thank you so much for watching, and I hope you have a wonderful day. Don't forget to like, comment, and subscribe. It really helps the channel as we're trying to grow. And also, as a thank you to the Economic Ninja, if you guys could go check out his channel, he gave us a shout out on his, so we're trying to return the favor. Thank you so much for that, and thank you all for watching.